Hey, Sarah, it is indeed a beat on the top and bottom line. EPS, earnings per share, coming in at $6.04 versus $5.68 the street was expecting. Revenue a little higher than expected as well at $72.38 billion. $71.87 billion was expected. Guidance, however, on the revenue side, a little bit light. The company is guiding $56 to $60 billion in Q1 revenue. The estimate was a little bit higher than that. I also want to bring you Q1 operating profit. The company is guiding between $2.3 billion and $3.3 billion. Guys, those are the top numbers, but we will continue to go through this and bring you more numbers from AWS, advertising, and some of the other segments.
Deirdre Bosa, thank you very much. Mike, stock is moving higher after hours. Always high expectations with this one.
There are. The stock is extending a little bit of its recent move. I don't think it was too far from consensus. Obviously, does look like a beat, although the top line beat, not tremendous in the scheme of things. So I do think it makes sense it's gaining. But, what's interesting is the stock finished the day, the regular session, almost halfway between its all-time high and the December low. So it kind of got half of it back. And now I think maybe the guidance is going to inform where we go from here.
The long-term theme as well here, Stephanie. I mean, EPS is up close to 200% year over year. And again, it's a kind of big tech company that's moving in the right direction on that to grow into this valuation that for years people questioned.
Yeah, and also the theme has been operating leverage and margin expansion and profitability, and that's what you got again in this quarter. They've done a nice job improving their profitability. That had been a really big knock on the company for many, many years, so it's good to see that. The operating income guidance for the first quarter actually is right in line, maybe a little bit better than expected, so I don't really worry so much about the revenue number. They're probably being a bit on the conservative side, but I'm more looking at the operating income guidance, and it looks pretty good.
I'm just going through the AWS trying to find the numbers. It looks like for AWS, net sales were about 46% higher from the year over year, so continuing the growth there.
And that 46% is exactly what they did in the third quarter, but it is down from the second quarter, so that number has been coming down, law of large numbers, but still a very good number. I think all you needed to do was in the low to mid 40s to have people be pretty happy. I mean, the stock is up 24% from its lows, so it's the risk reward, as Mike was just mentioning, is not nearly as good as it could have been, right? But that said, I mean, it's had a nice recovery, and I think this is enough to keep the momentum going.
Also, a line in the release saying that Alexa had a busy quarter herself. I like the wording of that. I
mean, there's so many tidbits they put in that to distract you here from the numbers.
Yeah, it's all just kind of a brag sheet. Really.
So I'm going to the numbers. North America net sales up 18%. That actually is a marked slowdown from what we had been seeing from other quarters, and a little surprising given this was a strong holiday quarter.
They never really do that well, actually, in the fourth quarter because they don't price compete, right, versus the peers. So that's why their margins are actually so good. So 18% is fine. I don't think you really own it for the retail piece, to be quite honest with you, and you certainly don't own it for the fourth quarter North America retail piece. You really do own it for AWS and the operating profit and the profitability and leverage.
Mike, how's this performed relative to the likes of Microsoft and then I guess other online retailers?
I mean, it was just such a tremendous outperformer on the upside going into September that it's given much more back. So, I mean, Microsoft has been a much steadier story, but so basically when it got up to, essentially the trillion-dollar valuation moment, above $2,000 a share, early September, down 34% from there into the December low, and then you regain half of that back since.
You know, it's interesting here in some of the discussion portion of the tidbit. So they pulled up the minimum wage, remember, and that actually took an effect in November. Once they decided to increase it to $15 per hour, the company received a record of approximately 850,000 work applications for hourly positions in November 2018, more than double what they saw the previous record for applications in a month.
Well, it's already cool to be working for Amazon, and then you're going to get more money to work for Amazon, right. So all the better, right?
Has it been a profit problem?
Well, it's been a headwind for sure, but I think that they're focusing on other areas to improve the operating income, the operating profits and margins, that sort of thing. So it's nice in the face of these headwinds that they could actually do the numbers that they're doing, especially on the bottom line.
And different ways of characterizing the growth. So they do a trailing 12-month free cash flow. So for each quarter, how much they made in free cash flow for the prior 12 months. And, almost $20 billion in the most recent quarter on a trailing basis. And that, to me, if there's any way that the valuation has kind of stuck to a certain metric over time. It has been a free cash flow yield. It had been around 2%. It got below that. So that's one thing to kind of also use as a benchmark.
Dee has been diving into the numbers and has another take. Dee.
That's right. Well, if I want to break down some of the segments and the product lines, you guys mentioned AWS's cloud computing business. That actually came in a little bit above what the street was expecting, revenue at $7.43 billion. But product lines, a few misses here. Physical stores, this includes Whole Foods. Revenue from this product line came in at $4.4 billion, $4.7 billion was expected. And this is interesting here. Subscription services, this includes Prime memberships. Revenue was $3.96 billion. So this is a little bit below what analysts were expecting of $4.32 billion. So you have to wonder if this means that perhaps Prime memberships are saturated, particularly in the U.S., as a lot of analysts have pointed to. Also, the ad business, very strong, $3.4 billion. However, that is a little bit below what analysts were expecting, and it grew 95% last quarter, year over year. That is a big amount, but that's not the triple-digit growth that we have seen over the previous 3 quarters.